What is up, guys? I'm back yet again with another one. Today, I'll be discussing two of the many different entry strategies I use with one of my students. Sit back, relax, and enjoy. So yeah, no, look, I think you are well on your way. Of course, these things just require a lot of practice and a lot of patience, you understand? But, if you keep the concepts right and the risk tight, you'll be good. Okay. All right.
Okay.
Cool. Now let's move on to today. Your session today is not that long. It's very brief. We just want to discuss really that sixth entry style, and we just discuss a little bit about that engulfing candle. All right, like what we're doing with it. Okay. So remember, our key point of interest is here. Let's say this is the H4 time frame. All right. Can you see my charts?
Yes, I can see.
Okay. This is the H4 time frame, and it's our buying key point of interest. We want to buy in here, right? So now, look at it this way. On the lower time frames, price is approaching our buying key point of interest in this manner, right? Lower highs, lower lows, whatever. This is the M15, blah, blah, blah. Then we get into our zone of bias. So it's our zone of bias, mainly because we've done our analysis, and from the higher time frames, top down, we are saying we should hold for us to buy. But remember, we don't just buy. We wait for price to give us a reason to buy. So for this one, what you want is for the Dow theory to be breached. Basically, you want price to come in and then to break the most recent high. So notice one thing, we've been forming lower highs and lower lows, but now we are now starting to break things only after we reached our zone of bias. This is how we start developing our story. Are we together? You understand?
Yes, I'm with you.
We break the most recent high, and this break of the structure is not happening in the middle of no, it's happening after we've touched our key point of interest. Okay, so now after that, we wait for price to retrace and form a higher low. Notice this was a low, then now we have a higher low over here. Okay, all right. Then after that, what you want is to now maintain your focus on this new high right here. Okay, to say, okay, I'm going to focus on this new high, and you want price to break this new high. Okay, boom, like that. Now, once it has done that, you're going to find the order block that is responsible for breaking that new high, and you're going to wait here, and you're going to punish. So now I want you to notice what has exactly happened. This entry confirmation is called order flow. All right, I call it an order flow entry. We have gotten in to the key point of interest with the bearish order flow. All right, the buyers in here have engaged. The buying order flow, the buying sentiment starts coming into the market. The buying order flow starts, and you have gotten in at the right time. So now, just logically, this type of entry is basically a scaling in device. Why do I call it a scaling in device? Because, if we're going to be quite honest with each other, you might have already entered at the bottom of the channel, at the break of the channel, and then your stop loss is at the vertical and all that stuff, right? Or all the other things we've been discussing, really, you might have actually entered. But when you see this order flow scenario happening, you can actually just scale in again. Do you understand? It's just definitely another way of viewing the market. Are we together? Do you understand this mechanism right here?
Yeah, I think according to me, this is like a confirmed, that the market has definitely changed because you've got two structure breaks now.
Exactly, right? So maybe here, after this first structure break, we're not sure. Maybe this is just a liquidity grab and we're continuing down. But now after the second one, surely the uptrend has started. You see what I'm saying?
Yeah.
I like that. Okay, so now let's just look at it from a sell perspective. Okay, so what do we have? Price is coming in to our selling key point of interest, right? And on the lower time frames, this is what we look like, right? Higher highs and higher lows. And then boom, we get in. Now, what do we want to wait for? Or should not even wait for if we see it, because remember, there's other ways of entering second legs and all that stuff. And fine, we break structure. The structure is not happening in the middle of nowhere. The structure break's not happening in the middle of nowhere. It's actually happening after we've reached our key point of interest to sell. So this is what gets us excited. We have to really honestly, get to a stage whereby we're not just taking trades because we have free Wi-Fi and we have time. You know what I'm saying? It's not a game. These are financial markets. It's not a PlayStation game. I'll give you an example, Alfred. Like if I come to you, maybe even if I'm your cousin or your family member, and I say, look, can I please have let's both put in 1 million rand for this business idea I have. And if you don't understand that business idea, will you give me that 1 million rand?
No.
You know what I mean? You won't.
No.
No human being will. But you, like, when you don't understand the setup, why are you trading? You know, it's also an investment. You know what I'm saying? If you're not too sure, why is it that we have these itchy fingers to just press buy or sell? You know, so take it like that. You have to understand the setup before you jump in. You really, really, really say to yourself, okay, fine, I'm executing because you know what? I've seen that we have broken this structure. We formed a lower high over here. We had a high. Now it's a lower high. I've put my frame of reference here. We've broken this new low. I want to wait at the order block responsible, right? And if price comes in there, I'm in. You understand? So what has happened here is that we have come in with a bullish sentiment into the key point of interest, right? And then guess what? The selling sentiment in here has engaged. The sellers in here have started engaging. The selling sentiment has started, and then we have joined in at the right time. Once again, it's definitely a scaling in device. Reason why I say that it's a scaling in device, you might have entered with a channel break already, right? You might have entered with a maybe even head and shoulder pattern already. I don't know if you can see it, right?
Yeah, I
You
can
might have
see.
entered with a second leg entry. These things intertwine. That's the thing now. You understand? So you also need to get to a stage of trading off where you start saying to yourself, I only enter channel breaks. It's there. You know, you just have basically you have a constellation of all these methods. But with your back testing, you need to get to a stage whereby, you know, you say to yourself, there are only maybe these three types of entries you use. I'll give you an example. For me, I'm actually just liking the engulfing one because it's just pretty straightforward. And with my schedule, sometimes I'm actually just mentoring. So what happens is that I might not actually have time to trade, you know. But when I am trading and I see that we are engulfing and we're moving in a specific direction, that's what I'm going to use. If I have free time on my hands and I'm trading, I am going to look at these channel breaks and all that stuff. But now, you know, situational. Are you busy? Are you trying to swing the market? Are you trying to put your vertical stop loss after the channel break and then just let it breathe and let it be? You understand what I'm saying? Are you in front of your chart so you can actually wait for an engulfing? You see?
Mm.
That's why we learn all those different entry styles. It's like an arsenal of weapons so that when the market gives you the necessary conditions, you can attack. Cool. So that is basically an order flow entry. And then quickly, let's just discuss those engulfings as well. But with this, I want to discuss it with an actual example. Right? I like using them within selling market structure, to be honest with you, because I'm a seller of the market. I don't know if you've been with me long enough, you know, but what you're going to notice is that I usually sell. It's just what it is. Reason being, synthetic indices are always selling. That's one, and the sell moves are usually, yeah, you know, think of it this way: when an asset is crashing, it crashes hard, as opposed to when people are investing in it. You understand? So already, logically, if you catch a sell move, you're likely to catch it for some time. Then with an investment, it's a matter of convincing someone, right? It's a matter
Yeah.
of, oh, you know what? Bitcoin is buying. You should also buy. Okay, let me do some research, then I'll join. You understand what I'm saying?
Mm.
Or
Mm.
these crypto things are a scam. I'm not getting in. You know, it's a different movement as to boom when we're dropping. Okay, so you know, this is why I've said to myself, look, I do buy the market. Don't get it twisted. But when it comes to my position sizing, the buys I always risk less. You know what I mean? I risk way less because I'm not as comfortable. Not that I don't understand market structure and that I can't find buys, but from my experience with synthetic indices, I've made quite a significant amount from selling the market. But anyway, so over here quickly, let's just discuss. There's this engulfing candle here. That's really what we want to look at. And in terms of market structure, you know, this can be seen as a high as well, like a premium price. So what's nice about this key point of interest is that there's an engulfing there, right? So what have we been saying about these engulfing candles? When we've seen an engulfing candle, we want to go to the lower time frames within this whole zone and look like for an area of support that price actually broke out of. And then we are saying when price gets back in there, we should actually get the reaction that we want and start moving down. So this is going to allow you to even get those sniper entries that we like. But now the work is in finding that area that price broke out of. Now look at this. When you find that area, it doesn't have to be like a horizontal line. Make it like a zone. Make things make sense. Right? Nicely make it even a thick zone and say to yourself, can you see over here? I'm going to remove the overall key point of interest. Price got in here. This is the 30-minute chart. Don't be fooled by candles. This is actually a lot of time, right? For a few hours, we're actually struggling to break this whole zone here. Are we together? You see this? Such that we finally did. And now with this engulfing strategy, truly, when price comes back in there, we are wanting to sell. But the market makers are not stupid. They keep liquidating people. They know that you're looking at this zone. So you know what they'll do? They'll shift the market. And if you're not careful, you're going to be enticed to sell when the market is already here. You're too late once again. So their job now, because they can't afford for you to get this whole move correct, is to liquidate you, because they know if you press sell here, your stop loss is above here. Because look, any average textbook says that, after a nice bearish engulfing, or you see that it's going down, put your stop loss above the most recent high. Boom. That's what they go and fetch. You understand what I'm saying? And they're doing all of this while they're still respecting the zone. I'll give you an example of this. This is exactly what has happened on the step index. The step index, I gave an analysis yesterday, and guess what? It tricked us. You know why? Because I, in the morning, said this is the key point of interest, and it was respected, that key point of interest, but the way in which it was liquidated made me very angry, actually, because this, I don't know if you remember, this was the setup I sent. It said step index, H4, sell here. So my thing was, when price gets in here, I want to look for, although we don't really have an engulfing, I want to look for an area that price broke out of, right? So I want to be there to attack, right? So this is what, obviously, the area that price broke out of, you could just draw your thick zone here and say, this is it. Are we together? Right?
Yep.
Price is failing to break. Then we broke. When you come back here, this is you trying to sell the market now, because you're just a human being, right? You're thinking, surely it's about to go. Plus, you've seen this is 30 minutes, 1 hour, this is 3 hours. And we have respected the zone. At least let's go back here. But the market maker, I'm telling you, is from hell. He knows exactly that when you entered here, your stop loss went where? Here. And that's why he shifted the market impulsively. And if you're not careful, you also started buying here. You change your mindset. Let me buy, it's buying. So now there's two types of human beings who are trapped here. The guy who actually knows how to trade, and then the guy who's also just confused because he's thinking resistance is broken. He's just also very lost. But either way, they're all happy. By the time the market has shifted all the way to here, look, it's a done game. So what am I saying? Had you maybe entered here, and if you can stomach this, which I can tell you now, very few people can, you're still good. But I even called this trade off because I said, guys, it's likely to continue, because I was seeing the momentum. It looked like it was going up. But that's the thing. You're going to get liquidated at times. And this is it. That's the liquidation process there. At least when you're back testing, this is what you're going to need to look at. You understand what I'm saying? When you're going through your charts, when I say, guys, be back testing, actually assess that, oh, I see. Their stop loss is above here. This is what that move went to get them. If you want to see who is involved in a movement, the impulse can tell you. I told you already, you and I don't have enough money to generate enough movement, like enough volume like that. So this is just deliberate. Do you understand?
Yeah, definitely. I can see now.
100. Okay, so we have discussed order flow, and we have discussed engulfing candles. If you can do me a favor, actually, please send me this video. I want to post it, just for some people to actually view this. I think it's just powerful information that people need to understand. But yeah, so once again, the homework, if you could just get me an engulfing candle entry, all right? And then you could also get me an order flow one, all right? You know the mechanism now, you know exactly what we're looking at. And then, yes, I'll be happy if you can do that for me. Then we'll continue. I think tomorrow is my day off. I know you should be feeling sorry for me as well. We can congregate on we can continue on Monday.
No, that's fine.
All right. Okay. Thank you so much, Alfred. Enjoy your day.
You too. Thanks.
All right. So there you have it, guys. When it comes to trading, your entry is your net worth. It's very important to keep practicing entry techniques so that your results improve. If you're interested in what you see, you can feel free to contact me for mentorship. In fact, we can actually go through a few of some testimonials that I receive on a daily basis from satisfied clients. All right. So if I'm to open my WhatsApp here, we can see just early this morning, we can see this guy in considerable amounts of profits, obviously. And he's saying that he just tested the engulfing candle strategy and he's doing well. Malusi here, student of mine from South Africa, sending results. Bro, thanks. This is a clear buy entry on volatility 301S. Okay, that looks really good. Looks like really good profits. Then I also have a student of mine from Bermuda, Stuart. I know he sent me some really nice testimonial talking about step trade running in profits, subscription fee recouped. So he actually joined the mentorship and he made the mentorship money back. All right, in one trade. He's running, doubling the account in one trade. Right, so this is basically what we're doing, guys. If we can look at other people, we have Christian over here. I think he sent me a withdrawal slip yesterday. Exactly. He's sending me a withdrawal confirmation. And he's like, that is it, coach. You have my respect. I highly recommend your mentorship. So really some nice words, you know. As a mentor, it's very nice to see that your students are happy with your work, and, trading is definitely a great skill for you to grow money from the comfort of your home, but knowledge and expertise is required, obviously, like in anything. Then I have my student Oba here from Nigeria, sending me results, obviously showing a screen of entries. And then, of course, the testimonial, every trader deserves a mentor like you. And then Destiny. All right, now this guy actually did very well. I just need to find his testimonial. He made a lot of money in one trade. Let's see if we can hop to it quickly. Where are you? Where are you? Where are you, sir? Where are you? Yes, right here. And then here, God bless you. Okay. And there it is, $5,000 profit, right? And I think that was in over a span of, 2 trades, basically. And I obviously had to know that this is a real account. And yes, he claimed that it was a real account. So, these things are possible, These things are possible. It's all an element of practice. Practice makes perfect. I have my other student here, Fanwell. And, by the way, I watched that engulfing candle analysis video. All the info was worth thousands to me. And, obviously the profits roll in. Okay, so that's basically what we're doing, guys. If you're interested in mentorship, feel free to contact me. All my contact details are in the description of this video. I have recently opened an Instagram page for you to keep up with what we do during the day so that you're not in the dark and you just wait here on YouTube. So go and follow that, and then you see the crazy work we're doing. Thank you.